Welcome back to another week in review. We're looking at the trading week of September 8th, 2025. We're headfirst into September trading. We had some pretty wild volatility last week, and hopefully it actually continues this week because from a intraday and day trading perspective, it's been quite nice. So we'll get into last week in a moment. Getting data out of the way first. 3 p.m. Monday, we have consumer credit, not hugely market moving. Tuesday, it's not listed on Forex Factory, but we do have the annual NFP revision. That's at 10 a.m. Eastern time, so I'm not sure why it's not on this calendar, but one thing to consider is that is coming out at 10 a.m., so I'm not sure if there's going to be volatility around it, but it's something to pay attention to, or be aware of, I should say. Wednesday, 8:30 a.m. PPI, 10:30 we have crude oil inventories if you're trading crude, which I am. 1 p.m. we have the 10-year bond auction. Thursday we have CPI and jobless claims at 8:30 a.m. And then we have the 30-year bond auction at 1 p.m. And then 10 a.m. consumer sentiment on Friday, and 1-year inflation expectations as well at 10 a.m. on Friday. So CPI or PPI and CPI in that order this week obviously will be fairly impactful in the market. The implied range from the Friday at the money straddle is about 65 points on the cash index. So it's pricing at about a 1% up or down move, which has been fairly normal as far as the last few weeks, just with the market basically stuck in a large range. So nothing crazy getting priced in, at least going into this week. And then obviously after this week, getting into the end of the month, we have the FOMC rate decision as well as the contract roll. So we're going to have some volatility towards the end of the month for sure. And I think as far as, my baseline expectations go, I'm not really expecting a ton as we continue to carve out these huge multi-week ranges. I'm not really expecting, big, giant market moves potentially until we get into FOMC and we get into the rate decision, which is expected to be a cut towards the end of September. So we'll have to see, but that's just my general, baseline. I could be completely wrong. We could have a mega move this week with CPI. You never know. So getting into last week a little bit, interesting week. So we started the week with a liquidation low on Tuesday. If you're following me on Twitter or if you've watched some of these prior videos, one of the big things in my work would be how larger ranges and higher time frames form, and if they trigger some of my own indicators that I have. And last week we triggered blues at the lows, which immediately put me on the side of, okay, well, the extremes of range from the downside, based on what this is telling me, is very likely limited here. And I really wanted to see a sweep of the current and the prior weekly balance lows, but we didn't get that. We just happened to recover from it. But basically, once we started bidding above back up here, my thought process for the remainder of the week probably would be that we had a low in for the week, and we could look at two-way tape intraday for sure, but looking for those longer rotations potentially to be larger. The opposite side of that is that we actually had blues print into the highs. So when we had this happen in the pre-market on Friday, again, my expectations for the day were, an extreme move up, even though we had this, giga move up on Thursday and POC shifting into the high. Coming into a Friday, the ability for this market to continue extending, in my opinion, was limited. And then once I saw these print overnight, my bias shifted more towards potentially looking at reversion into the end of the week and potentially seeing this range fail, which is obviously what we got. So ended up having a nice trade on Friday to the downside. The big thing this week is whether or not we're going to be able to basically maintain some of the momentum that buyers had last week, and whether or not Friday was just a shakeout, or if it's going to be a situation where sellers are going to have a little bit of an edge for the next little bit. So as far as that goes, Friday is interesting in the sense of we formed a 6-week balance range from June into August, and the highs of that range, that big trading range we carved out for that period of time, were 64.50s. So basically right at Friday's low. We're currently in a 4-week balance period with the highs set at 65.41s and the lows set at 63.62s. So The daily formed a 2-day balance range. The weekly is currently in a 4-week balance range at 65.41 to 63.62s. And Friday's low held the old 6-week range we had that we tried to break out of, that we've kind of been basically balancing above for the last month or so, at 64.50s. So we had an attempt to we had a real liquidation from balance highs, but a look above and fail at 65.20s, these old balance highs that we had. And then we held the prior large trading range that we had at 64.50s, which is not insignificant. So the big thing for me, the big pivot for me for the next while is going to be 64.50s. It's going to be Friday's low. And I think as far as, from an intraday perspective, the big thing that I'll be watching on Sunday Globex come Monday is whether or not there's acceptance, whether or not there's interest basically printing back around Friday's low, which isn't great from an order flow perspective. I do think it needs to be cleaned up at some point. But the big thing is going to be, is there interest around Friday's low? So basically, we had this big liquidation. We had B period singles that were put in, and then they obviously not backfilled during the course of the day. Two pivots are going to be Friday's low and 64.93s. So immediately, if we see sellers get the continuation move to basically put in a bearish imbalance down, what we're going to see here is, if there's interest in Friday's low, if there's interest below it, and we see Friday's low start to offer, noting that that's also the top of a prior large trading balance range. This has been pretty critical pretty much on all time frames. Then my thought process is that selling isn't done, or at least the liquidation, profit taking, etc., whatever you want to call it, isn't done. And we can target the poor low that we have at 64.25s, and potentially, if this gets really nasty, potentially back into the poor low again, another poor low down here at 63.71s and balance low at 63.62s. So basically, acceptance under Friday's low to me is going to have some continuation selling, or at least some profit taking, people taking risk off. And I think the likelihood of trading back down into 24s, potentially all the way into the bottom of value from last week, as well as the lows of last week into 63.71s, is quite possible. Where that perspective would change, if we see solid drives above this 93 to 05 area. So basically, if we start closing higher time frames, if we start closing periods back above 95s or 93s, I should say, then I think backfilling this B period sell that we had from Friday is quite possible, or quite likely, I should say. And then if we're starting to close periods back above that NFP wick down and last week's value area high at 65.05s, then the trade, in my opinion, will be probably the rotational longs to get back up into the top of last week's range, retest where we actually started to sell and started to break down. So basically what you could use, or basically probably what I want to wait for, is testing the extremes of last week's value, or pardon me, Friday's value, I should say. So whether or not there's interest and acceptance below Friday's low, whether or not we potentially sweep it, fail, rebid, and that could start to move back up, or whether or not there's true acceptance below Friday's low, which should take us down back into the poor lows at 25s, and potentially all the way back down into the meat of value from Tuesday last week and last week's low, or whether or not we're basically getting above this 93 to 05 area, and whether or not the buying will continue and get us back up into last week's highs. If we actually can see buyers really break away, start bidding back above 05s, then we still have this old target of 65, 63s up here, which is yet to be seen from the old balance range that we had. The top of the balance range, which was Friday's low right here, 150% away from that, was still going to be 65, 63. So this is still potentially a target. We could see that, and I think that would start if we start to see acceptance back above this 65.05 to 93 area. I think it's entirely possible. You have to be careful again. There was a very large seller up into 35s last week, so we obviously have to be careful up into this range to see if there's responsive selling. But I think early strength on this market, or at least shrugging off what happened on Friday, would happen with period closes above this 93 to 05 area. So that's how I'm going to be looking at that. NASDAQ is interesting in the sense of, we obviously had the liquidation break, but we never took out the prior day low, and we basically put an engulfing week from the prior inside weekly range. So we got below it, we printed blues again. We swept the Jackson Hole weekly low. V recovered, and then we actually took out the last week, the prior week, inside week high. Didn't close above. We had the same liquidation break, but NASDAQ for the remainder of the day, I wouldn't say it remained bid, but it didn't. There wasn't interest in selling this lower. Similar to ES, both stopped, both found, both found a bid, but really, the NASDAQ ended up outperforming in a sense, and we didn't actually take out the prior day lows, and we held this prior range, this 500 range, which pinned us for quite some time. We basically flipped, the resistance that it was back into support. And we also have this 200 period moving average on the 4-hour chart here as well, which has been pretty pivotal on how this market has been reacting. And we held that basically to the tick on Friday. So going to be the same thing. If we accept below Friday's low, then I think probably what we'd see is a gap fill. So we have this unfilled island gap reversal down here, down into 2370s, and we have a naked POC down into 23200s. So I think if we start to see us puke Friday's low, a natural target will be backfilling this gap into 270s and potentially all the way down into 200s again. And again, same thing. We have unfilled B period single prints from Friday. So if this market's going to shrug off what happened on Friday, we're going to see acceptance back above 23,700s, which is this Thursday daily high, as well as the base of the backfill, the pullback, afternoon pullback in the sense of pullback high from the sell on Friday for 23,700s, as well as the B period, basically the open B period singles. So if we start to see buyers step in again, this gets shrugged off, then what we will see is higher time frames and period closes above 23,700s, and that can take us back up into last week's upper range up here. So fairly fluid for me, but I think as far as where I'm paying attention, it's really going to be around Friday's low, and it's going to be around this 93 to 05 area and how we basically trade inside this range. Again, it's entirely possible that liquidation break and the fail at the top of prior balance isn't finished, and we could easily see us move down into, especially with balance rules, we could easily see us move back down into the bottom of balance and potentially clean up some of these poor lows, or these two poor lows that we still have. So have to be open to either side of this. We are locked in balance. Two-way tape is going to be present anytime you're in balance, and obviously every time we've tried to break away from a larger balance range, we've ended up failing at the highs or failing at the lows, and then liquidating the opposite direction. So you need to be open to anything, trading in this range right now. Obviously, there's been prime opportunities on both sides. So, anybody that's holding, a strict positional bias on this, from an intraday perspective, it can work, but the thing is, being open to being a buyer or seller if you're an intraday day trader, I think is very, very key. And being able to flip bias is also very key. So one of the big things I think, especially on Friday, that I saw online was when we ended up liquidating from the highs, a lot of people were looking for, a 2-3% move down on the day. And having that expectation after, a multi-sigma move back into weekly range, back into weekly VWAP, back into, the prior balance range highs is not generally going to be realistic. You need to have real momentum for those things to happen, and you need to have a completely bidless ladder, and obviously that's not what started to happen when we swept out the prior day lows. When we started to hold weekly VWAP, it was just truly a reversion trade back down. And obviously the bigger question now is, do sellers continue to take this lower on that liquidation break to potentially complete the traverse of old balance, or does it get shrugged off? So I think we can manage around Friday's low and potentially this range up here. And then on the NASDAQ, again, same idea, managing around Friday's low and up into 23,700s, and how we basically trade away from Friday's value. Trades for me, fairly limited lately. I've been trading mostly oil, really, to be honest, but trying to keep, when we're in these big balance ranges like this, when we're carving out with two-way tape, I'm trying to be fairly selective and not get chopped up in between. So that's going to continue to be the case. But I think at least using these ranges from Friday can give us a starting point for this week, and then we can see how we shake out from Wednesday, Thursday with PPI, CPI, and then jobless claims as well. But like I said at the beginning of this, I also think that, I'm not expecting, and again, this can be wrong, but I'm not expecting, a giant move away from this giga range that we've been carving out, really, probably until September FOMC. I think that's probably going to be the catalyst for some type of larger market volatility move, because there's a lot of speculation around if we're going to cut. The market's pricing in a cut, but as far as the size of the cut goes, 25, 50 basis points. Market's expecting 25. Maybe we get a surprise, 50 with those NFP numbers, which were, surprisingly weak. I really don't know. I'm not going to try and predict it, but I think we're probably going to be trading around this range a little bit longer, probably until the end of September. So hopefully that helps. If it does, leave a comment, like the video, comment if you have any questions, subscribe to the channel if you haven't. That would mean a lot. Appreciate your time. Thanks.